But with stocks raring to go, so is the floor show. And our star traders, John Corpina from the floor of the New York Stock Exchange and Kenny Polcari. John, normally this federal holiday would be a snoozer for the markets. I mean, I'm sure volume might be thin, but the bulls are wide awake. What's got them running?
Hey, Liz. Yeah, so that's exactly it. We've got a quiet market today with not a lot of participation, not a lot of volume. That's going to add to a big influx and volatility in our markets. This could have gone either way today. Overall sentiment has been, as we've seen, the market trending higher and higher. But on a day like today, this move is certainly magnified than one that would be in a normal session. But backing up, sentiment is here in this market. We continue to trade higher. I think investors are feeling comfortable, not fully putting more money into this market, but allowing their portfolios to continue to grow and not being forced to do anything. You add in the fact that we're still in this uncertain area with the Fed and what they're going to do next, uncertainty in U.S. Presidential election. So pretty much everything is on cruise control right now. You're kind of forced into doing nothing. But as we see these markets move higher and higher, I think we're going to get a little bit more volatility as we get towards this election, as we get past that and we get towards the end of the year, because there's a lot of unknown that's out there. And then just add the geopolitical risks, the headlines that we saw over the weekend, China, Taiwan. These things are still out there. They can and will have an impact on our market. It's not resonating just yet.
Kenny, doesn't that make the case for domestic stocks, U.S. equities? I mean, you've got Christopher Waller. He is, of course, the Federal Reserve governor and a voting member. He's just making headlines right now saying the economy is on solid footing, at least here in the United States, x all the drama that John just articulated globally. Expect GDP to grow faster in the second half of 2024. So do you just stay home with American stocks?
Listen, I think you stay home for the bulk of it, right? There's always a case to be made to reaching out, investing, having some international exposure across Europe, right? Having some international exposure in the emerging markets. I keep it very small, 2 or 3% of the total portfolio in emerging markets. But in Europe, there's always a reason to be there as long as you're sticking with the big names. But to your point, there's nothing wrong here at home. The economy is going along fine. The labor market is not imploding. It's going to be interesting, though, when bond yields hit 4.16, which is a long-term trendline resistance. What happens if we push up and through there? Today, we don't know because the bond market's closed. But let's see what happens in the next couple of days. Where's that level going to be that's going to cause investors to just take a breather and say, okay, bond yields have moved up. Let me get a little bit more cautious.
Yeah, the 10-year, while not trading right now, had closed at 4.096. So just to give people a sense of exactly what you're talking about. John, when we look at earnings, I mean, bank earnings on Friday, they really lit the fuse. JP Morgan, Wells Fargo came out with banger numbers. I believe Wells Fargo is even adding on to the big gains it saw on Friday. We've got a lot more big financial names that are going to be reporting starting tomorrow and the rest of this week. Tomorrow, we've got Bank of America, Goldman Sachs, Citi, PNC. It's very crowded. Schwab's in there. So do you look at the financials, which today aren't exactly going gangbusters, but do you look at those and say, boy, if JP Morgan and Wells Fargo had such good numbers, the rest of them are going to look pretty as well?
Yeah, I think they are a good indicator of what's going on and what's out there in the financial sector. In this new interest rate environment that we're in, the financial industry has been able to manage that very well. What I think we need to look forward to in the financial sector is M&A activity, which is a huge moneymaker for these investment banks, has been very quiet. We go back 2-3 years about all these smaller incubus companies that are waiting to come public and waiting for the right time. From a market's perspective, it's probably the right time, the way the market has been performing. In an overall kind of global perspective, not the right time, right? We don't know what's going to happen with the U.S. election. We have these other headwinds that we've spoken about that's there. So I think in the beginning of 2025, we're going to start seeing M&A activity pick up, and that's certainly going to help the financial sector.
Okay, so we don't know on any given day what's going to happen, whether it's with the markets or our own lives. But Kenny, what are you picking up right now? I mean, today is not the day to be buying because we are looking at all-time records. But what where are you really eager to dip in and scoop up some things once they come down a little bit?
So you're going to look at names that are in the sectors that have been underperforming this year. So consumer discretionary is only up 9%. It's well below where the market is. I'm certainly not chasing tech. I continue to like, even though utilities are up about 25% in the year, I continue to like utilities because of the story. Rates going down, utility stocks are always a good buy, but then the demand for electricity and energy is only going to skyrocket, as you know, as AI takes more and more control. So utilities is a great place. I'd be looking at, like I said, I'd be looking at healthcare. I'd be looking at basic materials. I'd be looking at consumer discretionaries.
Not energy. I mean, again, we're looking at oil right now. I got to point this out. Oil is down 2.25%, West Texas Intermediate. And of course, OPEC is cutting the global oil demand forecast for the third consecutive month. Guys, great to have you. So much action on this holiday here.